Welcome to the Daily Business and Finance Show. Federal Reserve's future rate cuts and market optimism. S&P, Dow hit record highs, Nasdaq surges. Intel secures massive $20 billion in U.S. grants for chip production boost. Paramount enters spotlight with Apollo's $11 billion offer. Apple faces potential DOJ antitrust lawsuit. Micron skyrockets after Q2 results exceed expectations. Equinix stumbles amid Hindenburg Research short report, while Supermicro computer prices hefty $1.8 billion equity at $875 per share. Stay tuned after the short ad break as we delve deeper into these headlines and what they mean for you and the world of business. The Federal Reserve has outlined plans for 3 reductions in interest rates by the year 2024. However, it is awaiting further evidence of inflation before moving forward with these plans. Both growth and inflation forecasts have seen an increase, which in turn reduces the potential for cuts from 2025 onwards. Despite a higher than anticipated inflation rate and GDP growth, projections for the Fed's rate remain consistent for 2024. Predictions indicate that the unemployment rate will decrease to 4% in 2024, while core PCE inflation is projected to hit 2.6%.
Wall Street reached unprecedented levels following the Federal Reserve's decision to keep its projection of 3 rate reductions in 2024. The Nasdaq Composite escalated by 1.25%, concluding at 16,369.41 points. Concurrently, the S&P 500 and Dow Jones also attained record peaks. Despite inflation data surpassing expectations, Jerome Powell, the chair of Fed, reaffirmed intentions to commence lowering rates within this year. In other news, Tencent, a colossal gaming corporation from China, disclosed a shortfall in quarterly revenue but declared intentions to magnify its stock repurchase scheme twofold.
The United States government is poised to provide Intel with approximately $20 billion in grants and potential loans aimed at enhancing domestic semiconductor production. This sum comprises up to $8.5 billion from the Department of Commerce, along with an option for federal loans amounting to a maximum of $11 billion. These funds are intended to back Intel's strategy of investing more than $100 billion in the United States over a span of 5 years, with a focus on improving chip-making capacity and fostering emerging technologies such as artificial intelligence or AI. This substantial investment is projected to generate thousands of job opportunities across multiple states.
It is reported that Apollo Global Management has proposed a deal to purchase Paramount Global's film and TV studio for an amount of $11 billion. This proposition has resulted in an increase of over 4% in Paramount's stock value. Concurrently, there is another offer on the table from Skydance Media, who are interested in acquiring National Amusements, the parent company of Paramount. Despite these offers, Sherry Redstone, the controlling shareholder, seems to be uncertain about selling a portion of her shares.
It is reported that the United States Department of Justice is gearing up to file a lawsuit against Apple. The tech giant stands accused of alleged antitrust violations, specifically blocking competitors from accessing iPhone features. This incident marks the 3rd lawsuit of its kind against Apple, paralleling a similar ongoing case against Google over monopolization allegations in the advertising sector. Following these developments, Apple's shares experienced a 1% drop in after-hours trading on Wednesday.
Micron Technology experienced a 12% surge in share prices during after-hours trading, following Q2 results that exceeded expectations. The company announced an adjusted earning of 42 cents per share, with revenues reaching $5.82 billion, outperforming analysts' forecasts. Sanjay Mehrotra, the CEO of Micron, attributes this strong performance to their diverse range of products and predicts a solid second half for fiscal year 2024 due to potential AI opportunities within the semiconductor industry.
Equinix, a real estate investment trust specializing in data centers, experienced a 2.2% drop in share value after Hindenburg Research published a short report. In response to the allegations made in the report, Equinix is currently conducting an internal review and has temporarily suspended its 9-year Eurobonds offering, despite high demand. HSBC has also revised its rating for Equinix from buy to hold. This decision was influenced by potential operational and reputational risks stemming from accusations that Equinix has been selling power beyond its available capacity.
Super Microcomputer has set the price for its public offering of 2 million shares at $875 per share, with an expectation to generate a total of $1.75 billion. The capital raised will be allocated towards supporting operations, which includes purchasing inventory, expanding manufacturing capacity, and boosting investments in research and development. However, despite these plans, the company's stock price experienced a decrease of 0.87% during pre-market trading.
And that's a wrap for today's The Daily Business and Finance Show. Keep investing in your knowledge. We'll meet again tomorrow. Until then, stay savvy. I'm Montgomery Jones.
And I'm Amalia Dupre. Good night for now, until we cross paths again tomorrow.
This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. This podcast provides information only and should not be construed as financial or business advice. Check out our other podcasts in our network at classicstudios.com.